What's up, long-termies? I'm Austin Lieberman, and I'm here to help you become a better long-term investor. Today, as you know by the title, and you've probably seen in the news, Amazon.com announced a 20-for-1 stock split and a $10 billion buyback. So in the next 5 minutes, I'm going to cover whether or not I think Amazon is a buy, sell, or hold from here, and this is kind of rare out there on YouTube, whether or not I own it in my portfolio, and if I plan to buy it before I actually buy it. So literally, if I'm planning to buy it, I'm going to tell you that weeks before I actually buy it because I get automated purchases in my account each month. So let's jump into it. What we've got here is the Amazon.com stock chart. Today, we know the stock's up about 6%, but let's zoom out a little bit and look at it over the last 3 months. Stock's down 16%. And then over the last year, the stock is down almost 4%. The business has been performing well. And so, historically, when Amazon's been down 10, 20%, it's been a good buying opportunity, which is what has me thinking about the stock. Fast Graphs is one of my favorite tools, and I'm a paying customer. This is not any type of affiliate relationship. I get nothing for mentioning them. I use the tool. Over the last 10 years, we're looking at operating cash flow, which is one way to potentially value a business. And that's the one I'm using today. We've got 5 minutes, so I'm not going to get into the details. I'll cover that in a future video. Let me know in the comments if you're interested in learning more about financial metrics. But anyways, over the last pretty much 10 years, the operating cash flow growth rate has been 32% a year. So this orange line represents the future potential share price if shares are valued at the operating cash flow growth rate. So this would be if the price to operating cash flow ratio was 32, which is the operating cash flow growth rate. Blue represents the normal price to operating cash flow on average over the past 10 years. And if it were to continue over the next 2 years, that's the right side of this chart. None of this is guarantees. This is just a good idea. It shows you where it's traded. The black line is the price of the stock. And you can see historically it's been either above the orange line, minus the whole COVID thing, or, somewhere in between. And so, just a rule of thumb, a starting point, it's good to imagine that it will likely fall somewhere in between here, depending on what happens. But for safety, I'm going to just kind of go to this blue line, which is a little bit more conservative. So from today's price to the average operating cash flow, price operating cash flow ratio by December 2024, if it gets up to that and stays at that, then the share price return would be 158%, which is an annual return of 40.1%. And so even if it didn't get to a 26 price operating cash flow ratio, but it was down more at 20, you can even look kind of at what that would look like. So from here, this is just a different chart that allows us to look out. But if we take it down to even 19, you're still looking at a 24%, 25% annual rate of return from here, which makes Amazon super interesting to me. So these are talking about projections of what analysts think the operating cash flow is going to be. You can even look at earnings and different things like that. What I like to do just quickly, and this isn't a deep dive in a stock by any means, I want to look at whether or not analysts have tended to be above or below the actual company results. If the company outperforms the analyst expectations, it's safe to think that maybe results could be better than what analysts are thinking they're going to be in the future. Not guaranteed, nothing's guaranteed, but I like to look at the history of execution from the companies that I'm owning or interested in owning. And be sure to stay tuned and find out if I actually own this stock or not, which we're going to cover next. So let's just look at it. Red means they missed, green means they beat. And as you can see, most recent from the fourth quarter 2021 all the way back to the first quarter of 2017, they've only missed 1, 2, 3, 4, 5 times on earnings, and 1, 2, 3, 4, 5, 6 times on revenue. And so they've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 beats, 5 misses. So they're beating, I don't know, 80% of the time, 70, 80% of the time. Pretty solid results. So last thing we're going to cover in this quick 5-minute video is whether or not I own the company. This is commonstock.com. Full disclosure, I've used this platform. It's a social media platform, but not toxic, and we're focused on high quality investing to both learn and produce investing content. I've used the product for years, and I loved it so much that I applied to the company and recently started working there. So anybody can have a profile on here, and this is just my profile. And the cool thing is I can very securely connect my brokerage where nobody ever sees the value, but it does show my performance. This is the performance of my portfolio, and it tracks what I own. And obviously we're continuing to improve the platform and try to offer more data and information to people that use the platform. So that's what we're focused on. But these are the stocks that I own. And as you'll notice, I don't have Amazon in this portfolio. I own some Datadog, Coinbase, HubSpot. Those are my biggest positions. All the way down, you don't see Amazon in here. So as of right now, I'm not a shareholder, but I am very strongly considering using my next month's contributions to buy shares of Amazon because it's a proven winner. Yes, it's a massive company, but in the environment that we're in the world, in the economy, I like to own proven winners, and Amazon is most certainly a proven winner. So would love to hear from you in the comments. Do you plan to buy Amazon? Do you already buy it? And if you like this video, if you find it valuable, let me know in the comments, ask me for future topics, and then like the video, and then share it with your friends, and I'll give you a big virtual hug. Thanks a lot. This is Austin, and we're out of here.